Mr. Speaker, I ask unanimous consent that all members have 5 legislative days in which to revise and extend their remarks and to include extraneous material on H.R. 4457.
Without objection.
And, Mr. Speaker, I yield myself such time as I may consume.
The gentleman is recognized.
The tax burden small businesses, farmers, ranchers, and their workers face is too high. Every dollar Washington takes from small businesses is a dollar that they don't have to invest in equipment, start a new production line, hire a new employee, or provide more in wages and benefits. Businesses aren't growing, and hardworking Americans are seeing stagnant wages and fewer working hours. This is unacceptable. It seems these days that Congress can rarely agree on much. So when we can find some common ground to help grow the economy and get businesses to invest and hire new workers, we should act immediately. The legislation we have before us today, America's Small Business Tax Relief Act of 2014, would do just that by providing a permanent extension of Section 179 expensing at a level of $500,000. Section 179 is a bipartisan provision that's been in place since the 1950s. But businesses, farmers, and ranchers cannot reap the full benefits when they have no idea if this provision is going to be around the next year or what it might look like. This hurts their ability to plan for the future and expand their businesses. The Farm Bureau recently stated this practice makes it difficult for farmers and ranchers to plan and adds immense confusion and complexity to the tax code. It's time to make Section 179 permanent at an expensing level of $500,000 so American farmers, ranchers, and small businesses can invest in new equipment, grow their businesses, and plan for the future. Sure, House Democrats, many who have sponsored this legislation before, are now demanding that we pay for an extension of these policies, despite voting year after year to extend these job-creating policies without being paid for. But frankly, the millions of Americans searching for jobs or a few extra dollars in their paychecks know that pro-growth policies like this pay for itself in the form of new investments, new jobs, and higher wages. I think we can all agree this is the right policy, and we should set the rhetoric aside so we can have an America that works with a strong and vibrant economy. By supporting permanent policies, Washington can promote certainty for American businesses and generate additional economic growth. We've become too accustomed to poor jobs reports, anemic growth, and just accepting things as they are. Small business expensing has been a bipartisan policy for decades, and it's time to make it a permanent part of the tax code. Washington needs to wake up, start listening to the American people, and act on real policies that strengthen the economy and help hardworking taxpayers, and today's legislation will do just that, and I reserve the balance of my time.
The gentleman reserves. The gentleman from Michigan is recognized.
Thank you very much, Mr. Speaker. I yield myself such time as I shall consume.
The gentleman is recognized.
Small business can have full confidence that this provision will be extended, period. Indeed, the fact that I have voted for it many times in the past, as pointed out, is confidence that it will be continued. The suggestion that we've made to continue it for 2 years, we're already well into the first year. If we don't act until the end of the year and we extend it for 2 years, that would be another one, not even for another full year, but there would be a 2-year extension. So small business can be fully confident this will be extended. There is no threat to it, zero threat to its extension. When it was said earlier by the chairman that small business can have no idea as to whether this will be extended next year, that simply is not correct. The Senate has before it a bill to extend it 2 years. At some point that will pass, and that's the bill that will be taken up in the House. The chairman did extend permanently this provision, not many others. He paid for that. He paid for it. The chairman extolled the fact that he paid for it. And now they have gone in reverse and now suggest that we proceed unpaid for permanently. And the cost of this is far different than a 2-year extension, as I've mentioned. Far different. We're talking about over $70 billion compared to a few $1 billion. And so let me just say, everybody has to be mystified why in the world the Republicans are doing this when it violates their budget, when it violates the chairman and the Republican Ways and Means tax proposal, and when, if this is done, it is going to be part of a ratcheting up of the deficit of $614 billion, and will have major ramifications for so many programs. And essentially what they're doing is, on the one hand, increasing this deficit dramatically through the ceiling, and then they're going to come back on the other hand and say, the deficit went through the ceiling, so we need to take away with the other. Education programs, health programs, all kinds of programs that are necessary, transportation programs. They're going to say, well, we just don't have the money, when essentially the reason is because they have tried to pass a bill that throws money out the window. We're going to extend the small business tax cut. We're going to do that. Democrats will stand together to make sure that that happens, but not in a way that's part of a reckless, irresponsible approach. And that's a major, major reason we simply have to say, extend it for 2 years, then let's sit down and talk about what we're going to do with these provisions as part of a tax reform effort that's serious and is bipartisan. I reserve the balance of my time.
On reserves, the gentleman from Michigan is recognized.
Thank you. Mr. Speaker, I ask unanimous consent that the gentleman from Ohio, Mr. Tiberi, control the remainder of the time.
The gentleman from Ohio is recognized.
Thank you, Mr. Speaker. I yield myself such time as I may consume.
The gentleman is recognized.
Mr. Speaker, thank you. Mr. Chairman, thank you for your leadership in the Ways and Means Committee. It's been an honor and privilege to work with you. You have been a great leader, and we look forward to allowing you to lead us for the rest of this year on our committee as we continue the debate on the extenders and making some permanent. H.R. 4457 would permanently extend small business expensing for equipment and property outlined in Section 179 of the Tax Code. As many of you know, Section 179 first came into existence in 1958. I wasn't yet born. My parents were not yet married. They got married in 1958, so they didn't see the debate here in Washington. It may not have been quite like the debate today, though, I would say, because, ladies and gentlemen, members of Congress, this is a mystifying debate. This shouldn't be this difficult. No wonder Congress has a low approval rating. Section 179 of our tax code is very simple, and as the chairman said, very bipartisan over the years. It allows business owners to immediately deduct the cost of investments of property and computer software immediately, rather than depreciating such cost over time. In fact, on January 1st, what had been an extender that allowed for maximum expensing of $500,000 and the deduction phased out of investments exceeding $2 million went back to what is current law today. That's why this is so important. It's the essence of this debate and the essence of what my bill does. Because it went down. It went down to $25,000, the limit, and up to $200,000 of investments. So if you talk to Tom and Judy Price in my district, who think that what we do here is just crazy and mystifying, because they have to make real decisions in real time with real money, not make-believe, not theory. They have to make decisions that impact real lives and real cost and real jobs. And this is a jobs bill. That's what this is about. And if you ask Tom and Judy Price, well, we've had expensing. And we've had higher limits than $25,000. We don't today. Well, we had them before. They weren't paid for. We had them for 10 years since I've been here, and they haven't been paid for. But you know what? Here's the reality of life in Delaware County, Ohio today. I talked to Tom Price this morning, Mr. Speaker. He has a mulching business. He needs to buy a loader. Is Congress gonna provide certainty? Oh, 2 years is fine. Retroactivity is fine. That's the narrative around here, Mr. Speaker. We've done it before. Let's do it again this way. The Senate won't accept it. Let's surrender our card today. Let's surrender my voting card, Mr. Speaker. It's somewhere here. Let me give it to the Senate. My daughter going into 6th grade understands there's 2 houses. We shouldn't be surrendering this card, Mr. Speaker, to the Senate because, oh, the Senate's going to do it their way. We've always done it that way. Ladies and gentlemen, bill becomes a law this way. House passes a bill. That's what we're trying to do today, Mr. Speaker. Add permanency. Tom and Judy Price in their mulching business, they would like certainty to plan. Not, oh, we'll make it retroactive and we'll go out a year and, oh, by the way, Mr. Price, we're going to do this in November. We're going to do it in November. We're going to make it retroactive to January. Are you kidding me? Are you kidding me? You guys couldn't survive running a business in Washington, D.C. You couldn't survive. That's what this debate's all about. It's about reality. My daughter knows that the Senate has the right to do anything they want, but we have our right with our card. Guess what? There's supposed to be a conference committee. There's supposed to be a real debate. And oh my God, compromise between the House and the Senate. That's what this is supposed to be about. That's what I tell my daughter who's going into 6th grade. But no, let's surrender to the Senate right now. Let's just surrender. We've surrendered before. And oh my goodness, these deficits, these businesses pay taxes. You all want to raise taxes on them. When we had a debate on this floor, and I was here in 2009, we passed $1 trillion stimulus bill. $1 trillion. Nobody cared about the deficit then. But Mr. Price and Mrs. Price are trying to buy a loader for $200,000. And we are debating over the deficit and temporary tax code and retroactivity and surrendering to the Senate. That's what this debate is about. That's what this has come to. And you wonder why, Mr. Speaker, Americans think Washington's broken because we don't understand what real-life Americans who are trying to run a business and hire employees and raise their wages, they don't understand why we're having these mystical debates, because they're living in the real world. The real world. With that, Mr. Speaker, I reserve the balance of my time.
The gentleman reserves. The chair will receive a message.
Mr. Speaker, a message from the Senate.
Mr. Speaker,
Madam Secretary.
I have been directed by the Senate to inform the House that the Senate has passed S. 1681, cited as the Intelligence Authorization Act for fiscal year 2014, in which the concurrence of the House is requested.
The gentleman from Michigan is recognized.
I now yield 5 minutes to our whip, the very distinguished gentleman from Maryland, Mr. Hoyer.
The gentleman from Maryland is recognized for 5 minutes.
Mr. Speaker, I rise in opposition to this bill, but I am constrained to respond to the remarks, the emotional remarks, the perplexed remarks of the gentleman who preceded me. I have a voting card too. And I don't know whether either Tom or Judy Price have been unemployed, or whether their brother or their sister have run out of unemployment insurance and have been left twisting in the wind. But this voting card could give them extended unemployment insurance. I don't know whether Tom and Judy Price have employees who are making the minimum wage and living in poverty. This card could change that and up the minimum wage, but it hasn't been brought to the floor. I tell my friend from Ohio, this card could fix what everybody agrees is a broken immigration system, but we're not using this card, I tell my friend from Ohio, because we are dabbling in the unrealistic. This card could pass export-import. He wants to grow jobs. Export-import is absolutely critical, and it phases out, and you will not bring it to this floor. This card and your card, joined together with 216 other cards, could pass all of those pieces of legislation. This card could make sure that Tom and Judy Price have an economy that's more resilient. And this card, my friend from Ohio is distracted, but I tell my friend from Ohio, this card helped pass the Recovery and Reinvestment Act, without which Tom and Judy Price may not be in business today. Because your tax policies of 01 and 03, unpaid for, which were supposed to grow this economy, resulted in more loss of jobs than any policy since Hoover. This card ought to be used today for fiscal responsibility. This card ought to be used to say to your chairman that you praised, David Camp, yes, we want to do comprehensive tax reform, not just little item by little item by little item, which destroys tax reform, which exacerbates our deficit and will destroy investment in education, infrastructure, and growing our economy. This card, I urge my colleagues to use responsibly this day. All of us here support helping small businesses expand operations so they can hire more workers. All of us. Our tax code ought to encourage small businesses to do so. But the Republican majority's approach to tax policy, evidenced by the two bills on the floor today, is simply the wrong path. Do not use your card given to you by the American people, trusting that you will do the responsible, common sense thing. Don't use this card irresponsibly today. The bills we're considering today are the latest examples of Republican hypocrisy, Mr. Speaker. Hypocrisy on deficits, as their approach would raise deficits by hundreds of billions of dollars. There is no free lunch. This pretends there's a free lunch. Hypocrisy on tax policy, as they represent a rejection of the comprehensive approach to tax reform Republicans' own Ways and Means Chairman, David Camp, that the gentleman from Ohio just praised, put on this floor, or at least put on the table, not on the floor. And the response of the Speaker of this House was, and I quote, blah, 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 blah. What a shame. How unserious. While I have serious concerns about some of the policy changes that Chairman Camp's proposal contains, it made the difficult choices, and it was paid for. It was responsible. Republicans and Democrats all say we want a comprehensive tax reform. This undermines tax reform. So if you say you're for comprehensive tax reform. Don't do little itty-bitty pieces that are unpaid for, exacerbate the deficit, and undermine tax reform. These bills today, may I have one additional minute?
I yield 2 additional minutes.
The gentleman is recognized.
These bills today reject that approach and instead take the easy way out by irresponsibly adding their cost to the deficit. A deficit that my friends on the other side of the aisle, with whom I join, lament on a daily basis, but somehow disconnect their policies from their lamentations. In doing so, these bills will put even more pressure on a discretionary budget facing the return of sequester next year, undermining our ability to invest in critical priorities like veterans care, highways, education, bills to make sure that we grow our economy and create jobs. Democrats are ready to make the hard choices so that we leave America a better country, not a poorer country, not a deeper in debt country, but a better country for our children and our grandchildren. Rather than waste our time on these individual bills, Congress ought to debate and amend comprehensive tax reform, allowing us to face up to our responsibility to make the tough decisions the American people expect from their representatives. Now, Mr. Speaker, I don't live in a perfect Congress. None of us do. Or in a country that always makes the right decisions. So I will vote for an MTR, which says we're not going to permanently exacerbate our deficit, but we will make sure that business does have the opportunity to have these tax benefits as we have on a bipartisan basis done in the past. So I will vote for the MTR. I will vote to make sure that we extend these for 2 years as the Senate suggests. I don't think that's the best policy. It's not the policy I would choose. The policy I would choose is comprehensively giving permanent, long-term R&D paid for so that we don't exacerbate the deficit, but we do give confidence so businesses can grow. So I tell my friend from Ohio, we both have a card. The responsible step for us to take is to vote no on temporary and come with fiscally responsible legislation to this floor.
The gentleman's
and I
time
yield
has
back
expired.
the balance of my time.
Gentleman from Ohio is recognized.
Mr. Speaker, I yield 2 minutes to the gentleman from the Hoosier State, Indiana, a great member of the Ways and Means Committee and a member of the Select Revenue Subcommittee. He's provided great leadership on the subcommittee, and I appreciate his work. For 2 minutes.
Gentleman from Indiana is recognized for 2 minutes.
Thank you, Mr. Speaker. I rise today in support of H.R. 4457, America's Small Business Tax Relief Act. I want to thank my colleague Pat Tiberi for his hard work on this initiative, which is vital to small businesses and farmers across my district. I'd be remiss if I didn't respond to the last speaker's comments, the distinguished gentleman from Maryland, who with a straight face indicated that this card, his card, was a vehicle for fiscal responsibility, when consistently he's confused this card with this card, a credit card. We've continued to rack up debts over and over again, and we have not engaged in growth-oriented public policy, and that's what this bill is intended to do. This bill increases the amount a small business taxpayer may immediately deduct when she buys operating materials for her business. The ability of small businesses to immediately deduct the cost of qualified investment in the year purchased, rather than having to recover the cost through depreciation over several years, has been essential to the survival of thousands of firms over the past decade. Higher expensing limits will encourage businesses to invest in new computers, tractors, and other types of business equipment and grow. Such investment will have, of course, important second-order effects. Economists tell us this on the economy as these purchases are magnified throughout the nation. The version of Section 179 we're considering today expired at the end of 2012, and since then, back home, I've heard from a parade of constituents, business owners and workers alike, about the need to restore the provision. I've heard from Indiana NFIB, Indiana Chamber of Commerce, Indiana Manufacturers Association, Indiana Farm Bureau, and countless individual businesses and workers, and I'm glad we're working in the House, hopefully on a bipartisan basis, to help unleash the ability of our nation's small businesses to grow. We know our nation's small businesses, Mr. Speaker. May I have an additional 30 seconds?
The gentleman may have An additional minute.
The gentleman is recognized for 1 minute.
These small businesses are the engine of American job creation. They create roughly 3 out of 5 of American jobs that have been created over the recent years. And one critical means of supporting American small businesses and working Americans is through business tax incentives like Section 179. This is a proven success. It's proven itself over the last several years. And it's evident that these small businesses are one bright spot of job creation, personal opportunity, and upward mobility during these troubled times. I support this commonsensical bill. It's going to help small businesses grow and restore a measure of hope and opportunity to rank-and-file Americans during these troubled times. I'd like to thank Chairman Tiberi for his important work in offering this legislation. I'd ask my colleagues on the other side of the aisle to reconsider their partisan reservations to supporting this measure, and I yield back.
Will the gentleman yield?
Yields back.
Will the gentleman yield?
The gentleman
did yield.
The gentleman from Michigan is recognized.
I will yield myself 1 minute and yield to the whip.
The gentleman from Maryland is recognized for 1 minute.
I thank the gentleman for yielding. He raised his credit card. He apparently is going to use his vote as you would use a credit card, to incur an additional $73 billion in unpaid-for debt. I yield back.
Well,
yields back.
I have the balance of my minute. The gentleman, the whip is so correct. The gentleman from Indiana is very confused. He is using his voting card as a credit card. $73 billion on this bill. This is not a credit card, our voting card, but the Republicans are turning this into a credit card with calamitous results. I now yield 3 minutes to the gentleman from Texas, Mr. Doggett, another distinguished member of our committee.
Gentleman from Texas recognized for 3 minutes.
Thank you. It is clear that Republicans would dig our country into another $1 trillion of debt, borrowing from the Chinese, the Saudis, whoever will lend it to us. They've already approved $614 billion in business tax breaks, and they've told us that more are on the way. More tax privileges, more tax exceptions, more tax advantages. This bill today is just another chapter in their ledger of accounts payable for American taxpayers. Such fiscal irresponsibility doesn't represent a plan for genuine tax relief for small businesses or for anyone else. I will say that I agree with them that small businesses have every reason to complain, as do individual taxpayers, because the tax code that they've done so much to write is riddled with special treatment for those who pay more to their lobbyists here in Washington than they do to the U.S. Treasury. It's been a wise investment for them, but a pretty sorry outcome for small business and individual taxpayers. We have some multinational companies who have set up hundreds of offshore subsidiaries to shift their profits out of America and into a place where they don't pay a dime. I can tell you that the cleaning crew at the headquarters of General Electric pays a higher tax rate than General Electric does. That's not fair. They pay a higher tax rate than Joe's Bakery or Patty's Taco House down in San Antonio. That's not fair. It ought to be corrected, but instead they've added almost another $100 billion that they propose and have approved in committee to help those folks continue dodging their taxes. And at the same time, the proponents of this bill tell us that America simply cannot afford more to educate its children. Only day before yesterday, the Senate refused to address the problem of soaring student debt, now bigger than credit card debt, exceeded only by the giant debt they want to incur for more tax breaks. They tell us we can't afford to do the research necessary to cure Alzheimer's or to find new solutions to cancer and AIDS and other dread diseases. This is not about borrowing to raise small business up. This is just an excuse to reduce the government investment that we need to grow our economy. Apparently, to the Republicans, deficits only matter when asking seniors and students and others to sacrifice, but not when it comes to adding one tax break after another. Now, how did we get to the situation that we're in today? Well, there's been a convenient amnesia about the history of tax reform in this Congress. Last January, the gentleman from Ohio, the Speaker, Mr. Cantor, they came to this floor and they said, America, have we got a deal for you? May I have an additional minute? We've got a great deal for you. This big old fat tax code that's bigger than the Bible many times over, that we helped expand to resolve the needs of our special interest supporters, we're going to put it on a diet. We're going to thin it down. We're going to give you a simple tax code that's easy to comply with, and in addition to that, we're going to lower your rate. And you know what? We're going to do all that, and we're not going to add a penny to the national debt, and we'll keep the rates relatively the same for everybody. They reserved H.R. 1. They said it's so important, we're going to make it the #1 priority here. Where are we on that bill, I would ask the gentleman today? And I can tell you, it's still reserved for the Speaker. They've never bought it out and put it on this table and given the American people a chance to vote on it. Because what happened was they went through a long process. They produced their draft bill, and the lobby went wild against it. They could not stand up to the very people that helped them write the complex, unfair tax code we have today.
Gentleman's recognized for a minute.
They couldn't stand up to those special interests. So that bill, 18 months later, not the result of anything Democrats did, not the result of anything the President did, they couldn't agree among themselves about how to respond to all those special interest pressures. And so they're back today going one little bill at a time to add a few $100 billion here, a few $100 billion there, and not provide the comprehensive tax reform they told us themselves they would be providing. And that's why we find ourselves in the predicament we're in today. And I agree with the gentleman, people in Ohio and across America, Texas, elsewhere, they have reason to question this Congress because of promises just like that, promises to bring reform, to work together in a bipartisan fashion, left on the cutting room floor because special interests, the people that don't pay their fair share of taxes today, they want to keep it that way. They want to continue to disadvantage small business and individual taxpayers. And today we need to say no to this measure and no to their other temporary measures and demand real reform.
Gentleman's time has expired. Gentleman from Ohio is recognized.
Mr. Speaker, I yield myself such time as I may consume.
Gentleman is recognized.
Just for the record, the gentleman from Texas has voted for the policy of either increasing or extending Section 179 without offsets 6 times on a temporary basis for a total of 8 years. And the gentleman from Michigan has time to yield to you. The motion to recommit that the minority keeps talking about today will add billions to the deficit as well. And as I explained earlier, the problem with the narrative of we've done it this way, we're going to do it again, and the problem with surrender, as was talked about by the gentleman from Massachusetts, who I have a great deal of respect for, is the fact that we are missing the point of what's happening in real America. Real Americans see that we on this floor get a stimulus bill by the other side. In 2009, I was here, jammed down our throats, that added $1 trillion to the deficit. Today, the minority is concerned about the deficit, and I assume they want those same small business owners who are trying so hard to create jobs with additional regulations like Tom and Judy Price face, and they want them to pay more taxes. That's the bottom line. But when they have increased the debt before, whether it's for temporary tax policy or additional spending, there was no concern about the deficit and the debt. It's interesting, yesterday, Secretary Lew, at a speech at the Economic Club, Mr. Speaker, in New York said, and I will quote, "The U.S. could face a permanent downturn in economic growth without increased business investment." How timely. Because if you go to my district and talk to Tom Price or talk to Gary Skinner, who owns a farm, and I had a privilege of being in his combine, that combine cost $250,000. Guess what? It's about this provision today. And the reality with our unpermanent extender policy with respect to investments that Mr. Liu talked about yesterday is that real job creators who are trying to grow their businesses, hire more people, so people like my dad, when I was in high school, wouldn't have to get unemployment like he did, or my dad, who was an immigrant, so I understand a little bit about immigration, despite the fact the gentleman from Maryland might not think so, and Mom, another immigrant, could get jobs. That's what this is all about. And all you have to do is go talk to these job creators who are looking at us with a whole lot of perplexed looks as to why can't we change the narrative? Why can't the House have a position to negotiate with the Senate? Why does it have to always be, well, this is the way we've done it retroactively for 2 years, this is the way we'll do it again? That gives no certainty to these job creators, to these farmers. That's what this debate is all about, ladies and gentlemen. Mr. Speaker, with that, I reserve the balance.
The gentleman reserves. The gentleman from Michigan is recognized.
Thank you very much. It's now my pleasure to yield 3 minutes to another distinguished member of our committee, Mr. Blumenauer.
The gentleman from Washington is recognized.
I appreciate the gentleman's courtesy. And I listened to my friend from Ohio talk about concern for small businesses and the economy. And I'm reflecting at the thousands of businesses that were represented here on Capitol Hill this week, calling on Congress to get its act together dealing with transportation. We are facing a crisis in transportation in this country. The majority, because they couldn't put together a transportation bill last year, drove the Highway Trust Fund down. They milked every single dime to be able to get a 27-month extension. And what's happened? Well, actually, what's happened is it's not even going to last until October 1st. All across the country, states are cutting back on funding contracts now because the Department of Transportation is going to run out of money late this summer. These people were rallying on Capitol Hill, large business, small business, environment, unions from all across America saying, Congress, get your act together. And I note with some small amount of irony that my friends on the Ways and Means Committee have approved over $600 billion of tax breaks added to the deficit that would have fully funded not one 6-year transportation bill, but 2 robust transportation bills. Did you listen to those small businesses? Did you listen to the contractors? Did you listen to the equipment rental people, the asphalt, the gravel, the concrete? Those people we've turned a deaf ear to. The Ways and Means Committee in 42 months has not had a single hearing on transportation finance. We had one misguided work session that had never had the benefit of a hearing that collapsed. They passed it, but they couldn't even bring it to the floor. So we got this 27-month extension. We're facing this summer losing 700,000 jobs because Congress refuses to act. My friends on Ways and Means won't even have a hearing on it, will approve $600 billion worth of tax cuts, and we're not dealing with a crisis in your state, in my state, for red state, blue state, union, non-union, big business, small business, the U.S. Chamber of Commerce, and the building trades. Let's get a grip.
No minute.
If you care about small business, if you care about the health and welfare of your community, if you care about the future of the economy, read the Standard & Poor's report that pointed out that the investments we make will pay for themselves many times over. It's not just saving those 700,000 jobs. It's an opportunity to grow the economy in the future in something that doesn't have to be conservative, liberal, red state, blue state. It's an opportunity to bring America together, to rebuild and renew our economy. That's what we should be focusing on, rather than this sideshow today, and that is going to make long-term tax reform harder, add to the deficit, and not deal with fundamental problems that our constituents were asking us to deal with this week. There were thousands of them here rallying before the Congress. We turned a deaf ear, and this is the best we could come up with.
The gentleman's time has expired. The gentleman from Ohio is recognized.
Thank you, Mr. Speaker. I yield myself such time as I may consume.
The gentleman is recognized.
Mr. Speaker, I'd like to submit for the record a letter addressed to me and Representative Ron Kind from Wisconsin, dated June 9th, from many employers. In fact, it represents millions of job creators throughout America in their support of making permanent this provision of Section 179 of our tax code.
Without objection.
Mr. Speaker, I'd like to read from a letter that I received from the National Association of Manufacturers, a quote: "Having certainty over the tax treatment of critical investments will make planning for future investments significantly easier. Capital investment is key to economic growth, job creation, and competitiveness. Consequently, enactment of this policy would amount to a major step towards a tax code that will promote investment." Mr. Speaker, again, this is all about jobs, whether it's on a family farm, whether it's at a mulch business, whether it's a small manufacturer. This is about increasing jobs. Even Mr. Liu said we have a significant problem that we are facing about capital investments. This is, over the last 50 years, a tried and true provision that we know creates jobs. And to provide certainty is so critical if we talk to those job creators. I've talked to them, Mr. Speaker. This is so important to give them certainty over time, not retroactivity like the narrative that we fall into. With that, I reserve.
The gentleman reserves. The gentleman from Michigan is recognized.
I now yield 3 minutes to another distinguished gentleman of our committee, Mr. Kind from Wisconsin.
The gentleman is recognized.
Thank you, Mr. Speaker. I thank my friend for yielding me this time. And, for the record, Mr. Speaker, I was proud earlier this year to introduce the American Small Business Tax Relief Act with my good friend and colleague from the Ways and Means Committee, Mr. Tiberi, the small business expensing provision that's before us. And I get the feeling that during today's debate, we're kind of talking past each other, because I fully support the policy goals behind the small business expensing bill. It is important that we find a way to get this done. It is important that we establish permanency in the tax code. Just as I was supportive in introducing legislation on the S-Corp modernization bill earlier this year with my friend Dave Reichert on the committee. Many of those provisions were addressed earlier this morning. But the difference in today's debate, and really the difference in our party's approach to this policy change, it comes down to one simple idea: whether we're going to have the fiscal discipline to pay for these permanent changes in the tax code, or whether we're going to continue to rack up the debt and leave a legacy of debt for these children and our children and grandchildren throughout the country. That's the only difference that we have in today's debate. Not about the policy behind it and the permanent nature and the importance to small businesses and family farmers, but whether we're going to exercise the fiscal discipline to do this the right way, rather than continuing to dig this deficit hole deeper and leaving this for future generations to contend with. And that's why I encourage my colleagues to vote no and continue focusing on comprehensive tax reform. And earlier this year, I give the chairman of our committee, Dave Camp, credit for introducing a draft discussion proposal on comprehensive reform, because we've been guided under the last few years under a simple rule or proposition that if we're going to reduce tax rates, if we're going to broaden the base, if we're going to simplify the code and make it more competitive, we have to find offsets in it so we're not blowing holes in the deficit in the future. And Chairman Camp stayed true to that discipline. And what's ironic is now, just a few short weeks after the introduction of that, we're right back into these old bad habits of introducing tax cuts with no pay-fors, with no offsets, just to increase the debt for future generations. And what's especially ironic today is this comes just a few short weeks after they passed their own Republican budget resolution that has specifically stated in it that if we're going to do permanent changes to the tax code, they have to be offset. They have to be paid for. So which is it? A few weeks ago when you were singing the praises of fiscal discipline, supporting that budget resolution, talking about how you're going to make the tough choices, or today, of permanently changing with no offsets. And there is a difference, I tell my friend from Ohio, between some of the short-term extensions that are meant to keep the pressure on permanent changes versus what's being attempted today. Because he knows, as I do, as everyone else knows, that the number of times that this Congress has taken a vote for a permanent change in the tax code with no pay for and no offset has been zero. It has been zero.
Gentleman's time has expired.
An additional minute?
Yes, an additional 2 minutes.
The gentleman from Wisconsin is recognized for 2 minutes.
But what we also know around here is what does work. And what does work is pay-as-you-go budgetary rules. That was something that was in place during the 1990s with the support of President George H.W. Bush at the time and President Clinton at the time. And because of a strong, growing, robust economy that created 24 million jobs during that time, along with pay-as-you-go budgeting discipline, we ended up with 4 years of budget surpluses. That when we were paying down the national debt rather than adding to it. And that soon was replaced by the next administration and a Republican Congress that supported 2 wars with no pay-fors, supported 2 large tax cuts with no pay-fors. It supported the largest increase in Medicare spending, the Part D prescription drug bill, without a nickel of it being paid for. It supported the largest increase in discretionary spending since the Great Society without paying for any of it. So when President Obama took office, he inherited a $1.5 trillion budget deficit. And if people are wondering how we dig a hole like that, they need only look at bills that are on the floor today. They're talking about permanent changes to the tax code with no pay-fors. We can do better. I know it's hard work to do comprehensive tax reform. It means us having to stand up and saying no to a lot of powerful special interests in this town, but it's exactly what we have to have the courage to do it the right way, so we're not leaving this legacy of debt for these children and for future generations to wrestle with. I encourage my colleagues to vote no on this legislation. I yield back my time.
Gentleman yields back. The gentleman from Ohio is recognized.
Mr. Speaker, I'm going to continue to reserve.
Gentleman reserves. The gentleman from Michigan is recognized.
Thanks.
The gentleman has 4 minutes remaining.
Are you ready to close, Mr. Tiberi?
I have no further speakers, sir. I'm prepared to close.
Good, I will.
The gentleman from Michigan is recognized.
You know, the fact of the matter is that this provision is going to be extended. And you can vote for Mr. Neal's motion to recommit. I guess it's against your creed to vote for it. So you can vote no, but you'll vote later. And it may be a few months from now. It may not be until after the election. I think it would be better to do it now. If not now, in the next month. So don't scare, Mr. Tiberi, the small business people in your district. Tell them what the reality is. We're going to extend this, but we're not going to make it permanent, unpaid for. It hasn't been done before for good reason, including the need to review it now and then, and also to take into account the cost. I think what the Republicans are doing, to kind of use an old slogan, an old way of saying it, you're giving hypocrisy a bad name. This is contrary to your budget that you voted for. It's contrary to the Republican Ways and Means tax provision put together under the leadership of Dave Camp. And what's going to happen is, when you add all this together, you have an astronomical addition to the debt. $614 billion, climbing, if you follow this path, to $1 trillion. So I think there's no choice here. To avoid hypocrisy, or if you want to continue the hypocrisy on your side, vote for this. We're not going to do that. This is a bad idea to proceed this way. We support continuation of this bill, of this provision, in a responsible, not an irresponsible way, in a way that isn't reckless. So I strongly urge all the Democrats to look at the full picture here, the hypocrisy on their side, and the ramification, if we continue on this path, for the programs that we believe in, the programs that have helped to make the middle class of America, and the programs that need to be continued and not snuffed out because the Republicans, on the one hand, essentially skyrocketed the debt, and then they come back to us and say, we're sorry, we're so in debt that we have to keep cutting the programs that middle America counts on for their livelihood, for their jobs, for their education, and their health. So I strongly urge a no vote, and I look forward to the motion to recommit by Mr. Neal. I yield back.
The gentleman from Michigan yields back. The gentleman from Ohio is recognized. The gentleman from Ohio has 13 minutes remaining.
Thank you, Mr. Speaker. I shall not take that long. I yield myself such time as I may consume.
Gentleman's recognized.
I will tell the gentleman from Michigan, my constituents don't have to be scared. They watch us. I don't have to tell them anything. And I'm certainly not going to tell Mr. Skinner or Mr. Price, trust us. We will retroactively, ladies and gentlemen, we will retroactively, because we're going to surrender today, we're going to retroactively pass a policy in November or December to allow you to expense something that you bought in June. Because today, Mr. Price needs to buy a loader for his mulch business. And he scratches his head. Retroactively? Retroactively? You guys don't know what operating businesses are all about if you're talking about retroactively, because that's been the narrative here. The other narrative is the Senate's not going to do it. Well, with all due respect, after the R&D tax credit debate on this floor, when the same argument was used, Senator Barbara Boxer, not someone that I agree with a lot on things, said, maybe we should look at making that permanent. Senator Dick Durbin from Illinois, a member of the Democrat leadership, opened up the possibility of, maybe we should make some of these permanent. Tom and Judy Price would be proud of Mr. Durbin. I don't know if Mr. Durbin's run a business or not, but Mr. Price does with his wife. Ladies and gentlemen, this should be about common sense. Nobody's pure here. We've all added to the deficit. I would argue that the deficit was much higher when the other side was in control. Those are numbers. Less today, less last year, a lot more in 2009. I think we'd all agree. The deficit, the yearly deficit, the debt's certainly higher. The MTR will create debt. According to joint tax, my bill will as well. But this is about job creators, about allowing them to invest to grow their businesses, to hire more employees. The American dream that my mom and dad came here to believe and live in, ladies and gentlemen. In a house that my daughter in 6th grade, understands that we have a right as the House to pass a bill and have a position that might be different than the Senate's. God forgive us for having a different position than the Senate. But just because the Senate wants to do 2 years doesn't mean we have to do 2 years. I don't understand that narrative. Even some of my colleagues say, well, why are we doing this? Because the Senate doesn't agree. Give me a break, ladies and gentlemen. Let's have a conference committee for once. Wouldn't that be great? That would be grand. And we could fight it out in conference committee, just like the founders told us we should. But ladies and gentlemen, with respect to tax policy, there has been no member of the House and the Senate and the administration that has provided leadership to get to comprehensive tax reform like David Camp. He's been bipartisan, he's been open, he has provided incredible leadership. But as all of us know in looking at history, one House can't provide leadership. You need an executive at the White House who's going to provide leadership, and quite frankly, we've had none. I credit Ron Wyden, the chairman of the Senate. He's got a bill at least. He's got a draft. I might not agree with his draft, but he has a right to have a draft, and the Senate has a right to have a position. And you know what? Maybe one day we'll get there soon, Mr. Neal. I know you're for that. I'm for that. But we should have a House position. We should not surrender to the Senate. But to get comprehensive tax reform done, ladies and gentlemen, we have to have leadership in the White House. We can't do it alone. I thank Mr. Camp for his service. He has moved the ball on comprehensive tax reform greater than anybody has here since I've been here. But today is not about comprehensive tax reform, unfortunately. It's about providing certainty to small business owners, our job creators in America. This is what they want. This is what they need. This is what has been proven to be successful to allow them to expand their businesses. And today, if Tom Price buys a loader for $200,000, he has to expense it over 7 years. His cash flow is killed. And I am not going to go tell him, don't worry, trust me, we'll do it in December, retroactively. I will not do that. We need to have a position. We need to do it today. We need to do it right. This is about policy. This shouldn't be about politics. This should be about the House's position. And I urge each and every one of my colleagues to put the politics aside.